afternoon and welcome to Virtual Creation Studios here in Charlottetown, Prince Edward Island. Delighted to have representatives from Assumption Assurance back again, in particular Mehdi Shagir. He's the BDM Business Development Manager for Assumption for Atlantic Canada. And welcome, Mehdi. We're certainly glad to have you back.
I'm glad to be here. I feel that I'm home today.
Well, you're always welcome in Prince Edward
Thanks,
Island.
Paul. I appreciate. And why I'm saying I'm home, it's because I'm coming from Moncton, where we have our head office, and we're Atlantic. I am in the Atlantic province, one beautiful province, so it's good.
It's great. Now I understand this. Congratulations are in order. You got a beautiful new bride.
Exactly. Thank you so much. I really appreciate it. Thank you.
And you have to see the pictures of this woman. She's beautiful.
Oh,
I know. So
thank you.
So very much congratulations on the wedding. Hopefully you have lots of babies next time you come.
Oh, thank you. We will see. Thank you. That's in the project. Yeah.
That's all good.
Thanks.
So last time we had Assumption in, we kind of talked about what Assumption does and why we should deal with them, and some of the recaps of that, where it's an Atlantic Canadian company that's owned by the policy owners, and that's so important. Most people really don't know that. In today's world, there's so many different insurance products and stuff, and so we thought we would talk about just mortgage insurance and the new product that they have called Flexcare, and why that's beneficial to Atlantic Canadians and how it sets it apart from maybe others. We have a lot of products from Assumption Insurance, so we thought over the next course of 4 or 5 months or the year, we'll talk about each one of their products kind of individually. But today we're going to focus in on their mortgage protection products, which is extremely important and something that Atlantic Business Federation, where we work at, it's very important for those products because a lot of people get their financing through ABF. So, Flex Term Mortgage Protection. The banks are always trying to sell bank insurance. So what would be the difference between Assumption and, say, a bank term?
Okay, so first of all, if you don't mind, I just
sure.
want to give like a small information about our mutual. Okay. So I'm representing Assumption Life, and this is a mutual located in Moncton, okay. And we were created in 1903. So, and we have 4 lines of business. So we are offering service for individual insurance,
yes,
individual investments, group insurance, and group retirement. A huge difference, to answer your question, the difference between what we are offering and what banks offer in terms of quality of the product, who is the beneficiary, and the premiums as well. It's something very important. You have the control of the policy. You have the control of the life insurance, so you can increase the life insurance. You can add riders. You can add another person as an insurer, and the money goes directly to the beneficiary.
Yeah.
There is some details, very important details, that an advisor like you, Paul, can educate the client.
So when you go to the bank and they kind of coerce you into signing something, it really doesn't get underwritten at all.
That's true.
There's no guarantee that that's going to be paid out.
That's true.
With this particular product, after it goes through underwriting, it gets paid out. And that's very important.
Yeah.
Especially if your husband or your wife passes away, heaven forbid. But if it does happen, you want to make sure that your home is paid off, and your children, if you have children, they're protected as well. So it's extremely important. You were telling me earlier that Flex Term, not only does it have life insurance, but it also has components, or you can add or bundle, I guess that would be the easiest way of putting it. You can bundle other components like critical illness, disability. So maybe we can talk about this bundling.
Oh, 100% bundle. It means you're not offering just life insurance. You're offering life insurance and something we call DI, disability income. And there is 2 types of disability income, like the advisor can explain that more to the clients, and also critical illness. Okay, all of these 3 protections, if I may say, under one policy. So just one plan.
Right.
And what I can see, what I can say in here, when you offer life insurance, you cover just one risk, which is death. Right? But you're not covering the other parts of the risk, which is critical illness and the disability. I will just give you just some information to show you that this is very, very important and scary sometimes if you don't have a coverage. For example, if I give you just a 40 years old male, he is 33%, there is a 33% risk to be disabled.
Wow. 33%.
Yes, sir. Exactly.
Wow. That's scary.
This is scary, right? If you're not covered. And 22% to be critically ill. So this is for the gentleman. For the woman, it's kind of the same thing. Disabled, 38%, and critical illness, 17%.
Wow.
So if you're not bundling, you're covered just the 4% of death, right? So
with critical illness, from what you explained earlier, it's not, you don't have to die from critical illness.
Oh, yeah.
You just have to be diagnosed with up to 17...
$50,000.
Yeah, 17 different illnesses.
16.
16 different illnesses.
Yep.
So that would be included accidental loss of limbs, any type of heart surgery or heart attack, blindness, meningitis, amnesia, cancer, life-threatening cancer, not skin cancer, comas, coronary artery bypass surgery, any heart attack, kidney failure, any major organ failure, any major organ transplant, any paralysis due to an accident, or any severe burns or stroke. A lot of people that we get calls all the time that say, well, my husband or my wife has to die from that to get that payout. That's not true. So it can pay out up to $50,000 just by being diagnosed. Is that accurate?
Yeah, exactly. And the best parts with Assumption Life, there is no additional questions. So you answered the question related to the life side, which is flex term.
Right.
And you answered the question, you're fine, and your advisor recommend you to add a critical illness rider, and there is zero question on this one.
Wow, that's
so. And the good news, actually, you mentioned a new product, Flexcare. It's not a new product, but all of these adjustments that we have done are new, and we moved from $25,000 up to $50,000 just because of that. A lot of people ask us to add to give more intention to the critical illness rider.
So that would be a $50,000 paid out.
Yep.
You get diagnosed, it pays out,
Yep.
and that help goes towards paying your mortgage payment or your bills or
whatever
or whatever, your food or medications or whatever towards that. So it, like I say, a lot of people feel or think or get advised that you have to actually die from that, but you don't. You just have to get diagnosed. And you were saying what, up to 23% of males and females over the course of their lifetime develop one of these 16 conditions. So it's not 1% or 2%. When you get up into 23, that's 1 in 4 almost.
Yeah.
So that's
of course.
That's fairly significant. Hopefully it never happens, but you want to make sure that you have enough money in the cookie jar, if you will. And very few people have $50,000 to pay for those type of expenses. And you're dealing with cancer, or if you're dealing with a heart condition and trying to pay your bills at the exact same time. That's very, very hard to do.
Paying the bills. Thank you so much for this point, because we don't have to forget why we are creating all this product, to save the lifestyle of a client, right? So when I'm disabled, for example, I might lose my job or work just part-time, so I'm losing half of my income. If I'm lucky, I'm coming back after, 6 months or 1 year or 2 years. Maybe I'm not coming back to my normal stuff. But if you have your coverage, you cover this risk. So you will save the same lifestyle, the same house, the same...
Well, I mean, if you think about it, right? You just got a heart attack. You're dealing with the stress of all of that. And if you get a $50,000 payout, it allows you the time and the energy and the less stress, because your bills are looked after. So now you can concentrate on getting well.
Big time.
Yeah. And that's what the critical illness is for. It's not... to go out, and people don't get 50,000 and say, okay, let's go partying in Yugoslavia. They say, let's take that money, let's allocate time to getting physically well so I can go back to work. without the stress of dealing with all the stuff that you have to go through when you're going through one of these critical illness. And what's really interesting now, these numbers are showing that people that have critical illness get healthier faster because they're not dealing with the stress of the financial hardship and the illness.
Exactly. And all of these coverages under one policy. So the name of the product is Flexcare.
Yeah.
And we're advertise it as a mortgage protection because a
it's
big
all
part
tied
of a term is not just to cover the mortgage, but we are having a lot of requests. So that's what we have put in as a title, the mortgage protection. So you have life insurance, you have critical illness rider, and you have disability income.
So let's talk about the disability component of that.
Yep.
What was the numbers again on the number of people that get disabled? Maybe you can break those stats down.
Yeah, it's 15%. It's the highest one. It's 33% for men, 38% for women, whether you're a smoker or non-smoker.
Really?
Yeah.
That high? Ugh.
So it's risky. We're thinking about life insurance. Life insurance is very important. It will save a lot of family situation. But DI, we call that DI. It's a disability income, and this is very, very important as well.
So on this particular product, it can, for an individual, it can pay out up to $3,500 a month for an individual, and if you're a couple, it can pay up to $5,000 a month as a couple. And again, heaven forbid you get in a car accident and you can't work for a little while or whatever, this will kick in to pay for your bills on a monthly basis. And you don't have to prove your bills. It just pays out that amount that you've selected every month up to how many years?
We pay for 2 years.
2 years.
The disability, and there is a waiting period of 90 days. But I just wanna talk a little bit about the 3,500 monthly. This is the maximum. When the advisor is sitting with you guys and trying to do the analysis, and it depends to your salary, your income. So maybe you need just less than 3,500. Maybe you need more. Okay, it depends to your needs. But if there is a case that you need more than 3,500, you can go up to 5,000 with Assumption Life.
Oh, wow.
Yeah, okay. Monthly. There is some stuff because there is two types of disability. There is disability based on loan, if you have a loan, like a mortgage.
Exactly.
Or disability to cover the income.
Oh, I see. So if you made $60,000 a year, then you would want to make sure that you have enough to cover your bills.
Exactly. You can combine loan and income, and you can go up to $5,000 monthly.
And my understanding, when we take a look at the difference between bank insurance, again, that's underwritten at time of death or whatever, these are all underwritten at time of issue.
Yes, sir.
So there's no worry about it being paying out.
Yep.
And it bypasses income tax because it's an insurance product.
Yeah.
It gets paid out the full amount, whatever you've selected.
Bypass probates and all that stuff. Yeah, this is very, very important. And just to explain the word underwriting, it's all the medical exam and stuff like that. So banks, they don't do that. They just accept you right away. They accept you right away. So.
Well, somebody once said, and this is a great thing.
Yeah.
Bank insurance is an insurance that may pay out.
Mm-hmm.
Real insurance after underwriting does pay out.
Oh, yeah.
And that's the big difference. You don't want to get into a situation where your loved one passes away and then to find out, well, we're not going to pay out because of this and this and this.
Surprise.
And that's very scary.
Yeah.
And most people don't understand that the may payout is you can get your premiums back, but if something happens, you want to make sure that policy pays out. And that's extremely important. And that's the difference between bank insurance and real insurance, because real insurance does pay out after underwriting. And if there is a problem, they would be dealt with at underwriting, not when your loved one passes away, which is the time that you absolutely don't want to see that. So that's fair. Now, we will, just so you know, we're going to be putting links into the products at the bottom of this podcast. But we're also going to do a tutorial of how to do the online application. So you go there, you pick your product, you pick your disability or critical illness, and we'll follow it all the way through. And so you get a real clear understanding of, one, how the system works, and B, how the application works. It's very user-friendly, same as anything. When you get shown it, it'll be much easier for you to do it. Or if you have any questions, all of the contact information and these brochures, and I'll put one up here, right here.
I have one too.
See, we got two. We got twins.
Exactly.
So that will be at the links below. So.
Okay. Yeah, it's sometimes the occupation, it's a problem in time of accepting the policy. We just want to let you know, guys, that we're Assumption Life. There is no occupational underwriting on amount 1,500. Up to 1,500, we don't underwrite the occupation. So we accept. Yeah.
So if a guy, he works at McDonald's and he's he's making a couple of pennies over minimum wage, that occupation would be automatically guaranteed at 1,500. So.
Yeah. So when the advisor is going to submit the application in our software, Leah, you know Leah very well, and there is 3 questions. Are you working currently, and how many months per year, and how many hours as well? So if you answer yes, 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 which is the reality, you're qualified. Yeah, you're good to go.
And that's extremely important because some disability insurance, if you make a certain amount of money, they won't qualify you. Some insurance companies, the qualifying amount is $500. Try to pay your bills with $500 a month.
That's true. That's true.
It's just not going to happen.
That will never happen.
Anyway. And the pricing point between bank insurance and real insurance, people think, oh my gosh, real insurance is going to be 2, 3 times, 4 times the amount. It's not true.
The opposite.
It's the opposite. Real insurance is much more affordable because they do the underwriting.
Exactly.
So if there is any risk, they'll find out exactly up front. And if you're, say, 32 years old and you're healthy, you're going to be paying a considerable amount less. Bank insurance, they have to look at kind of the average from 18 years old to 65 years old. So your average could be 44 years old. So you're going to be priced at that. Mm-hmm. The guy that's at 22 years old, he's going to be paying twice as much through bank insurance than he would with real insurance because it's underwritten that way.
I just want to say that, and you're quick. So you said it before me. So that's the thing. So for renewal, when you renew your mortgage with the bank, you have to renew everything. Okay, so the price will not be the same. With Assumption Life or with real insurance, I like the word real that you're using, you pay for example, if you choose T25 or Term 25, so you pay the same premium for the coming 25 years, right? So it's the same premium, the same life insurance coverage. So if it's $250,000, it will be $250,000 for the rest of the term. You name the beneficiary, so it's not the bank that's going to take the money to pay out the mortgage. Your son, your wife, or your husband will take this money and will pay out the mortgage if he wants, because this is the money of the beneficiary, and he can do with the money whatever he wants. So it's not a must that you pay the mortgage. So it's kind of a flexible, as the name of the product, flex term.
Exactly.
So it's the flex product that you can also bundle, as you want to mention, bundle with life insurance, CI, DI, and this is something that we keep encouraging our advisors or advisors, financial brokers to do where they are meeting with the clients or prospects.
And it's really important. People don't realize that. Having an insurance is important, but the other thing is that it's transferable. And what I mean by that, a lot of times you have your insurance tied in with that bank, and you develop some type of illness, and your bank comes up for renewal, and you want to transfer out of that bank and go to a different bank. When you have a policy that's outside of the bank, doesn't make any difference. Yeah. You can have it for 25 years and you can switch your bank 10 times, but your premiums will still stay the same. And they can't deny you. They can't say, oh, you're changing banks. We're going to take that life insurance or disability or whatever from you and go to a different bank. Whenever you switch your account out of that bank and move it to somebody else, it starts all new again. Premiums increase, or if you've developed some type of health condition, you can't get insurance. So it's risky that way for sure. So there's a lot of different reasons to get real insurance versus bank insurance, but we would encourage you to talk to an advisor.
Yeah.
And again, we'll put the links for the advisors around Nova Scotia, New Brunswick, and Prince Edward Island in the links below. But certainly talk to them before you talk to an unlicensed bank manager that is selling a product.
That's correct.
That they shouldn't be selling, in my opinion. Again, I'm a little bit biased, but they really are not trained, and unfortunately, they do sell products that do not get paid, that don't get paid out at the end of the day. And heaven forbid you do lose your significant other, that's not the time to find out that you bought the wrong product.
All right, that's true. So there is another benefits included in this product, which is the term exchange. There is 3 built-in benefits but I will not go through all the details. I will just give you one, which is the term exchange, because you said renewal and stuff like that. So you can go from a term to a longer term without any proof of insurability, for example, for this product.
Okay.
So if you're T term 20 right now and you want to go to T25 for some reason, there is we will not ask you to go through the paramedical again and stuff like that. If you wanna, it's convertible. So if you want to move from a term coverage to a whole life coverage, you can do that with through Assumption Life's product without any proof of medical as well. Yeah, so it's flexible, as I said, and this is convertible up to age 75 and renewable up to age 90.
There you have it.
So when you have it, you have it.
And that's and that really, because as we age, of course, I'm still 29. But
yeah, I can.
I know it's crazy, but when you do age, unfortunately, you do develop health conditions, and it's good to know that you can renew this up until you're 90 years old. That's crazy good.
Yeah.
Well, Mehdi, as always, it was phenomenal for you to come down. Is there anything last things that you want to mention? We do invite you back for other products, but this product, again, we'll have the links below. It's called FlexTerm. It's very flexible. That's kind of what they do it. But it covers term insurance, life insurance product, critical illness, and disability that can be rolled into one product, and you pick and choose what's really important for you.
That's right. You said it right. Exactly. You know Assumption Life very well, and
I love the product.
You love the product, so I'm happy about that. And we are here for the advisor and for the client as well. And other than the products, we are offering also a client services top level. And if you need us, you will find us in the internet, and you will find all the information below the video, right?
Perfect. Yeah, we'll have everything linked up. And like I say, we're going to do a little explainer video just after this one ends.
Yeah, about the mortgage.
So stay tuned. Don't turn off yet. We'll explain exactly how to just go in, how to sign up, and answer the questions. But we'll go slowly, step by step, all the way through. And if there are any questions, link up or call the advisors. Link below in Nova Scotia, New Brunswick, and PEI, and in Newfoundland.
Exactly.
Now, I believe Assumption is all across Canada.
It's all across Canada. So I'm representing the Atlantic side, but I have my colleagues all around the.
That's right. And as you know, Virtual Creations is part of Atlantic Business Federation. So we do see things from Atlantic Canada perspective. Assumption is an Atlantic Canada company owned by its policy owners, and we can't emphasize that enough. And again, no disrespect for Montreal and Toronto, wherever. We do encourage people to shop local and buy products that are locally owned and operated.
All right. Thank you for that. All right. And
so again, congratulations on the wedding. And Mehdi is just a great guy. You know, he's a very good business development manager. He comes, most business development managers, they get on the phone, they say hi, you never see them, but he gets in the car, comes across to Prince Edward Island.
It's my pleasure.
And visits the agents one-on-one. It's very much appreciated.
Thank you so much. I really enjoy every time I came to your its episodes and the videos like that, and I'm hoping that you're gonna invite me next time talking about another product.
We're going to have another product, and we'll discuss that.
Thank you, sir.
And we'll bring that up, and we'll have it on the next podcast with Assumption Insurance.
Thank you.
And we'll have their logo right up here.
Exactly. Thank you. Merci.
Merci.
Merci. Thank you.
Welcome to Virtual Creation Studios, and today we're going to be talking about Assumption's Better Mortgage Solutions, where you can get an online quote for mortgage insurance that you can also add disability and critical illness in one really simple program. So you would go to either the Prince Edward Island, Nova Scotia, or New Brunswick site, and I'll put the links below, but for now we'll just use the Prince Edward Island one. You can just click on Get the quote right here, or you can just scroll down. It's probably better to scroll down because there's a couple of interesting features here. One, a good video on why life insurance through a life insurance company is better than a bank. And the three main reasons are: one, you choose the beneficiary, not the bank. So in other words, if you get a $300,000 policy and you only have $100,000 left in the mortgage, the additional $200,000 would go to the beneficiary that you've picked already. The second one is the coverage stays no matter where you bank. So if you get this policy and it's with, say, TD, and you want to renew your mortgage, except you're going to renew with Bank of Montreal, then you can keep this insurance without going through all of the headache and the cost of renewing it with another bank. And heaven forbid, if there was a medical condition that happened from the time that you get the policy and the time that you have to renew it, then you would be able to keep the insurance that you have already. So if it goes through medical underwriting through the bank and you wouldn't qualify, then you wouldn't qualify for mortgage insurance. So that's the second reason. And then the third reason, for to me is the most important, is that's fully underwritten at time of application. So in other words, they will underwrite it to see whether you can get insurance. And then if something happens, or you get disabled, or you die, or depending what type of insurance that you want, it will pay out because it's already been underwritten. Bank insurance, however, is underwritten at time of death. So if something happened between the time you get it and the time that you actually apply for benefits, it might not pay out because it's underwritten at time of death. So it's a big, big deal. You might want to watch the video to kind of explain that, but more importantly, those are the three main reasons right here why real insurance is better than bank insurance. So with this particular program, you can get mortgage insurance or term insurance, you can get disability insurance, and you can get critical illness insurance all in one policy. So let's give you kind of a step-by-step of how you would do that. So say, for example, you were born in 1983 and you're January 13th. So you're a male. Are you a smoker? Yes or no? He said, I'm not a smoker. Are you on parental leave? Are you working prior to parental leave? So just standard questions. How many years are on your mortgage? You pick your province. In this case, we're going Prince Edward Island because we're in the Prince Edward Island portal. How much is left on the mortgage? Say $250,000. And what your payments are a month? Say around $1,100. Do you want extra insurance on that? So say, for example, you want more, so $250,000 to cover the mortgage, but you want another $50,000 to cover, incidental expenses or funeral costs or whatever. So let's give you an extra $50,000 in here. Wait for the program to give you a quote. So as we said, we've got $250,000 to cover the mortgage. We've got an extra $50,000 to cover funeral expenses. It's locked in for 20 years, the same price. The actual life insurance benefit would be $300,000. So how we got that is the $250,000 plus the $50,000. The cost on that is $34 a month just for the life insurance part. The second part is life insurance with disability. So say if you want to have life insurance but you want a disability component added on to that policy, again, it's locked in for 20 years, $300,000, $1,100 for a disability benefit that pays out for up to a 2-year period, and that would be $60 a month. $34 plus disability component would give you a premium of $60.62. So this would cover you for disability as well as life insurance.
And the third one would be life insurance, disability insurance, and critical illness insurance. Now, critical illness insurance is a payout that would give you a one-time cash payout for a number of critical illness components, up to 16 covered conditions, including heart attack, kidney failure, major organ transplant, severe burns, stroke, bypass surgery, comas, cancer, blindness, bacterial meningitis, aplastic anemia, aortic surgery, or any accidental loss of any limbs. So how that works, of course, is that you would be diagnosed with any one of those 16 conditions, and it would give you a minimum coverage of 10,000 and a maximum coverage of 50,000 depending on the condition. It would cover for life insurance, disability insurance, and critical illness insurance. And again, this would cover for 300,000. That would be 250,000 for the mortgage, and we've increased it 50,000 just for incidentals. It would pay out the mortgage payment of $1,100 every month for up to 2 years for the disability component, and it would also give you a critical illness benefit of $26,400 for $81.66. So you would be covered for life, disability, and critical illness insurance. So what we like about this is you get to pick what you want and what the needs are for you individually. And all of the policy premiums are set out to be extremely affordable for everybody. So once you've decided which product that you want, say you just want the disability with life insurance, so you pick that particular product, gives you what you're signing up for $60.62. You can start the whole process right online. Their next pop-up is your actual application. So you just take some time to fill out your name, address. So the next pop-up would fill in your name. This would be a little health questionnaire. So then you designate who your beneficiaries were. You can put it as your estate, or you can specify who your beneficiary you would want to have. So then you get a chance to review the coverage, everything that you've just answered. So just do a quick review just to make sure that that's accurate, and then sign off on that. Then who's going to be the payer, and then they would want your banking information from there. So after all of that information is put in place, you just simply submit application and you're done. So again, Assumption has made it extremely easy for you to pick out your own insurance. You decide what the insurance needs are for you and what you want to be covered for, and it makes it extremely easy. So you're in charge of what you want, as opposed to some insurance salesperson sitting there saying you need this and you need that and you need the other thing. And there's nothing wrong with that, but sometimes it's much easier for you to decide with you and your family in front of the computer, picking out all of the numbers of what you exactly need, and then you decide what you can afford that's within your budget. So those numbers can change. This tutorial is to show you exactly how to apply, how to fill out the application, and how to get a quote. It makes it easier for you to decide what insurance you want, how you want it, and what is important for you and your family. So I thank you very much for watching. If there are any questions, all of the link details, the link for Nova Scotia, New Brunswick, and Prince Edward Island, as well as the contact information, will be attached below. So again, thank you very much for watching, and if there are any questions, feel free to call anytime. Thank you.